Hello, my name is Nifty Gnome, and welcome to my live action bookkeeping video. This is video 3 in the Grand Gate Gardens case study, and this video covers April week number 2. That's April 5th to April 11th, 2025. Check out the link below to download the documents, request a topic, or find out more about my case study project. On to the bookkeeping. So I have the QuickBooks open already and ready to go, and this would be the files that you can download from my website if you'd like to follow along on your own in your own case study. And I'm just going to open up the week number 2 with notes folder. And this week we've got some charges, some bills, and we have an invoice. So we start with the charges. Let's open this up. And we have 5 charges this week. All right. So I'm going to pull open the very first one here. And we can see that it is Gnome hardware. And here what we can see is that there was some wood and screws purchased, and Sarah said that this is for building new utility sheds in the greenhouse. So my little notes here, I noted I'm going to put this to property repair and maintenance. If she hadn't put that note, we wouldn't have known what that was for. We might have just put it to cogs or supplies. But she said that it's for building new shelves in the greenhouse, so we're going to put this to property repair and maintenance. There is that cheat sheet, or what I call the last 4, and on the last 4, we know that 5252, that is the business M card. So let's go ahead and put this in. So this is what I call a charge entry. We're going to use the expense entry screen, and it's a charge, not a bill, because the paid date is the same as the bill date, the payment amount is the same as the bill amount, and there's no check number to track. So because of all of that, we're going to put this in as an expense entry, or what I call a charge entry, just because the word expense is used so much everywhere. And we're going to say Gnome hardware. And that was paid by the Triangle M card. And that was paid on the 7th, I believe. Yep, the 7th. And then there's the reference number. We'll copy and paste. And I do put the bill numbers in. Even if it's not a bill, I like to have that detail in there. And as I mentioned, we're going to be putting this to property repair and maintenance. Now the pre-tax amount down at the bottom here is $292.92 plus HST, so $3,808. You can see is $331. Weird that the home hardware that I got this one from says GST, but that $3,808 is 13%, and it is the HST. GST and HST both go to CRA, so it doesn't matter either way whether it's GST or HST, just as long as we have the right number in and it's going to CRA. So I'm going to go save and new, and let's take a look at what the next item is. And what we have here is we have an Amazon invoice, and you can see that Sarah, she doesn't note how it was paid, and there's 2 ways to print the invoices from Amazon. One way you actually print like the transactions and it says how it's paid, so that's helpful. And then you've got the individual invoices. In this case, she gave us the invoice download, and because we don't know how it's paid, we have to stop, right? We have to look, and we got to see, do we have a bank feed yet? Do we have a statement? So not seeing how it was paid really does slow us down. For purposes of this case study, though, I do note that it's actually paid by the owner's credit card. Again, that's a bit dangerous because if she hadn't sent it, we wouldn't have entered it, and we would have missed it. And there's other reasons why it makes the bookkeeping difficult, but I always sort of nag each time, don't I? So what we're going to do is we're going to go ahead and put this in. There it is. Okay, and this was Amazon.ca, and it was actually paid by personal or owner's banker CC. And what was that date? That was April 10th. And we could put this in if we want. Excellent. And if we take a look here, it was Swingline Stapler. All right, so that's Office. That's nice and easy. And if we look at what the amount is, It is $15.19, but that includes HST. So there's the $13.44. Let's put that in with HST, $15.19. Perfect. Always, there's not always HST on the Amazon purchases, just a heads up, usually is, but not always. You want to take a look. And I don't put in the description unless it's weird or an asset purchase or I need to leave crumbs. So we're going to go save a new and see what the next one is. So here what we have is, okay, we have a discussion one here. Okay, let me bring up. This is a gas receipt from Cdn Tire. And a lot of times business owners start without realizing how the auto expenses need to be tracked and claimed. So in the case of a sole proprietorship, okay, the owner can claim a percentage of all of their gas, all of their insurance, all of their maintenance costs, like all of their lease expense, all of their interest on their loan payments. Like they can claim like a percentage of that based on how many kilometers they drove for business for the year, as a percentage of how many kilometers they drove in total. Right? So they have to know how many kilometers they drove in total. So you can simply note your odometer reading every January 1st. So that's something that can be done. And then also keeping a vehicle log of your business driving. And Mile IQ is one that I have a colleague who says that he really likes. So I'm testing out myself. But so I do suggest to all business owners to get Mile IQ. All business owners. So even if you're a shareholder in a corporation, you're going to claim your expenses differently as well. If you're a shareholder in a corporation, it's a different setup. Depends who owns the car. Do you own the car? Does the corp own the car? So we can talk more in a later video. But Cole's notes are an employee and a shareholder could be considered an employee of the corporation. So if an employee drives their own vehicle for business, then you can reimburse them for their mileage based on a kilometer rate issued by CRA each year. And when you do that, the business then can also claim the HST on that mileage when it's done in that way. So that's a way that you would do it if you were a shareholder or reimbursing an employee for business use of their personal vehicle if they're running around for you or something. But that's a corp, right? We're talking about Sarah at Grand Gate Gardens, and it is a sole proprietorship. This business is not incorporated. So that's that first instance. She needs to be keeping track of her mileage. So we don't know what her mileage is going to be for 2025 yet. We're just in April. We can sort of ask her how much she thinks it's going to be, but she's just starting out the business. So here's my general approach for claiming vehicle expense for a sole proprietor business owner. If we think that the vehicle usage is going to be like over 75% business, then we might as well go ahead and just put this in as an expense. And then at the end of the year, we're going to back out 25% of all of the vehicle expenses and the HST. So the business owner is going to be looking at their profit and loss month over month with slightly inflated expenses and HST credits, just about 25%. So if the business owner is going to be using their vehicle for less than 75%, say they're only going to be using it half the time for business, you can imagine that's an even bigger year-end adjustment to sort of take out of the business bookkeeping. So when a mixed use expense is at a lower percentage like that, I tend to, it depends on the expense, but for vehicle expenses, I would say this should go to owner's draw, but a sub general ledger account. A general ledger account that I call owner's draw personal auto expense. And then that way at the end of the year, so they can continue to sort of go ahead and give me all of their receipts because, well, whoever's doing the bookkeeping is tracking things for them. They might as well track all of their expenses since they can prorate a percentage of the entire amount, right? So if I put this in all towards owner's draw personal auto or owner's draw auto expenses, we're still sort of keeping track of their personal auto expenses, but it's not on the profit and loss. And so what's going to happen at the end of the year, we're actually going to take what we've put over on the balance sheet, we're going to divide it by like whatever the percentage is, let's say it's 50%, and then we can add that as a year-end adjustment once we find out what the percentage is of how much they drive their car for business. Yes, it's going to affect their profit. It's going to make their profit shrink down a bit, but what it's going to do is that means that their taxable income is dropped down a bit, so that makes their taxes a little lower, and then also their HST credits are going to have a little bit of a bump, so then they're not going to be paying as much in HST than what they were sort of tracking as the quarters go on. So that's just one way of approaching it. Just to summarize what I just said, if the business is not incorporated, then the owner can claim against the profit of the business a percentage of all of their vehicle expense based on what percentage of kilometers they drove for the business during that year. So they need to keep a vehicle log so that we know what the percentage is. So when I say a percentage of all of their vehicle expense, I mean a percentage of not just the gas receipts, and you need all of the gas receipts for that specific vehicle, but for the vehicle, a percentage of the insurance, if there is interest on a loan or the lease payments or any of the maintenance costs, but a percentage. And we don't know what that percentage is until the end of the year. So right now in April, Sarah used the business credit card that we reconciled to purchase gas for a car, and we don't know how much can be claimed against the business. These mixed expenses can get squishy. That's why for the vehicle, for example, it's often more a tax adjustment at the end of the year. So if the usage of the car for business is on the lower end of the spectrum, we don't want to have too much incorrect information on our profit and loss, and therefore we would put this to owner's draw. But we can say, put it in a special GL account called owner's draw auto expenses, so that at least at the end of the year, we can look at all of the auto expenses in that category and then prorate that amount for that tax adjustment. So there's my big long story about the squishiness of auto expenses. And because we have no idea how much Sarah is driving for business, we're going to put this against owner's draw auto expenses. So here we are in the charge entry screen, and let's go ahead and say Cdn Tire. And this was paid by the 5252, and that date was the 10th again. I'm not going to put a reference number in, and the category, as I said, was owner's draw, but the personal auto expenses. And we can say right here gas if we want, because Cdn Tire you don't necessarily know, but I'm going to say gas, and I'm going to say $73.50. Now there is HST in that $73.50. It's $8.46, but we can't claim all of that HST. We can only claim a portion of it, and we don't know what portion we can claim. Anytime you put something to owner's draw or contributions, or anytime it's a shareholder loan, if you're working on a corporation's bookkeeping, you can't claim HST on something that's not business. So never should be HST on the owner's draw. So we're going to say add a scope like this, and we're going to go save and new. So what's next over here? Let's open this up. And it is another Cdn Tire receipt, and it says flump. And if you go onto Cdn Tire's website, just like Home Depot's website, and you put in that number right there, you'll see a beautiful picture of a floor lamp. So Sarah did tell us that this MasterCard 5252 is always going to be business expense. So we know this isn't for her home. We know that she's setting up that shed area to like be a little store. So maybe she bought like a floor lamp to help light some of the shelving in there to sell stuff. So let's go ahead and put this in as, we could put it in as supplies, but I'm going to say office expense as well. Like it's one of those, could be either one. So I'm going to say Cdn Tire. And that is also by the triangle. That's also on the 10th. I just ran in after getting gas. And we're going to say office expenses. Maybe it's like a floor lamp you know, behind the register or the office section or something like that. And we can see $29.99 and then HST $33.89. Perfect. We're going to go save and new. There it is. There's one more, and it's VistaPrint. Oh, sorry, VPrint. I try to be a little generic sometimes. So here we go. We've got our VPrint, and this was forwarded to us. But, oh, actually, look, she wrote on it, charge to BizMC. So that's the problem with digital files. You can't really write on them when you you can, but it's not quick and easy, is it, to write on them. But we do have a note here, charge to the business MasterCard. That makes it easier. It's just easier if everything's purchased on the MasterCard, and then we don't have to worry or think about it. Do I say that a lot? Sorry, it's just, that's how I feel. So let's go ahead and put in VPrint. And that's Triangle MasterCard. And that date is also the 10th. She had a busy 10th day. She was running around. And the category, so business cards is interesting. I mean, it could be office expense or it could be advertising, either or. So there we're going to put it towards advertising. I mean, as you can see with these last few receipts that I've put in that like could be either or, could be either or, like there's subjectivity to bookkeeping, absolutely, but things still have to balance. And whether we put this towards advertising expense or office expense, it's not going to change the taxable income, and it's not going to change that cost of goods to revenue ratio either. So that's why the principle is more important than the rules. So there's more principles, less rules when it comes to bookkeeping and accounting. In fact, the rule set for bookkeeping and accounting is literally generally accepted accounting principles, not necessarily rules. GAAP, if you've heard of that before. So let's go ahead and put this in, and it's $10 or $9.99, sorry, plus HST, $11.29. Oh no, I had not looked it all the way over. It's going to say it's cheap for cards. So that was $41.86 with HST $47.30. Perfect. We're going to go save and new. And that is it for the charges. So we have all of the charges in. Let's go ahead and look at the bills. Okay, so we got 3 bills. I'm going to open up this first one. So what we have here is we have a utility bill. And this is something that I see quite often, is that business owners just have it in their head that they can sort of claim all sorts of things and will give the bookkeeper, you know, all of their paperwork that they think they might be able to possibly claim. Now, a lot of bookkeepers who have a lot of experience will be able to look at this and say, oh no, Sarah, this is your personal address. We can't claim your personal utilities on your business expense. Yes, there is times when self-employed individuals can claim business use of home, but that's generally a tax adjustment at the end of the year. Remember, we're talking about the auto expense. The business use of home is a much smaller percentage, and that's usually done at the end of the year if it is even a possibility. For Sarah, she actually has a location outside of her home, so there's less of a chance that she'll be able to even claim business use of home anyway. A conversation for her to have with her accountant, though. But a bookkeeper who's experienced is going to make sure that they look at that service address and know the business owner has either thought they could claim this or gave it to them accidentally. So this is a little bit of a, is the bookkeeper going to catch it sort of test in these documents. For this, I even say down in the notes, do not enter this. It's nothing to do with the business. So let's see what the next one is. And this is a bill, Signs and Wonders Printing, and we even have a note that it was paid by check on April 29th. And she purchased a big canvas sign to hang up. That's wonderful. So let's go ahead and put this in. Now we're on the expense screen, and as we mentioned before, we can see that the bill date is April 10th, and the pay date is April 29th, and there's a check number. So we're going to put this in as a bill and a bill payment. So I'm going to leave the expense screen. I'm going to say new bill, and we'll start again and say Signs and Wonders Printing, and that was I know I just said it. April 10th, busy day. And then the bill number was 5961. And I'm going to put this to advertising like that. And we can see that it is 450 plus tax. So 450 plus HST, 508.50, excellent. And because she has given us the information about how it was paid, we're going to put that in now. So that was another thing that if I was using this as a training course and I was reviewing the trainees' work, I would look to see, did they put this payment in? So we're going to hit just save, and then I'm going to go make payment. Now in QuickBooks, if there's more than one bill to pay, it lists them down the side here, or it lists them over here to check off. So we can pay more than one bill with a bill payment. So you can pay 4 or 5 bills, and you can partially pay bills. So maybe if it was like a $5,000 bill and Sarah only paid $2,000, so you can partially pay bills as well. So this was by check, so that is through the checking, and it was April 29th. And the check number was 015. And we're going to go save and close. Excellent. So that bill is in, and there's one more bill. And this bill is for things to be put into the gift shop. And I just want to do a call out to the fact that I wanted to make the documents kind of fun and interesting as much as I could. So Sarah chose a whole bunch of really funny mugs to sell in her gift shop. So I did take some time to find some one-liners that I thought would fit on a mug just to make people chuckle while they were doing their training. So now Sarah hasn't noted how she's paid this, so we'll just go ahead and put it in as a bill and leave it as unpaid until we get more information. And so this is Funky Gifts Wholesale, and the date is, look, it's an 11/4. Right? It's one of the ones that's backwards. And so again, just if somebody's just keeping their paperwork aside until they get a chance to enter the bookkeeping, still save it in monthly folders. Trust me, it'll save you quite a bit of headache later if you know just by what folder it is in whether this is April 11th or November 4th. So we're going to go ahead and say April 11th. And that's another plug for doing your bookkeeping sort of timely and continuous. We know that this is not November because November hasn't happened yet. So, and the bill number is 59735. Now, what she's doing is she's buying inventory for her gift shop. And especially for larger businesses, you're going to want to keep track of your inventory. And inventory is what you have, right? And it doesn't necessarily become a cost until you sell it. And that's when it moves out from inventory on the balance sheet of what you have to a cost of goods sold on your profit and loss. So that's like technically how these things happen, especially at larger operations. Sarah's a smaller operation. She's a small business. And so what we're going to do with Sarah's situation is we're actually just going to put this bill right against cost of goods sold, like the retail cost of goods sold. And then at the end of the year, we're going to ask Sarah to count her inventory in her store, and then we can do an adjustment at the end of the year, and we can say, oh, well, you've got 3,000 in inventory. Well, we'll decrease cost of goods sold and we'll increase inventory. Now, when I say we, that's generally the accountant. But that's what we in the accounting world will do. And still a good idea to keep track of her inventory, maybe with another sort of inventory management. The inventory management in QuickBooks Online isn't very, I haven't used it a lot. I haven't worked with inventory a lot, but I've just heard out there in the world that it's not very robust. So if Sarah doesn't want to keep counting once a year, she might want to invest in a inventory management software. But for our purposes, we're going to just put this towards cost of goods sold retail. So we'll come down and we can see, there it is. So this is COGS, purchases retail, 2434.65 with HST, 275117, and it's the last bill, so we can go save and close. So what do we have next? Let's pull over the folder. We're going to go back up and we can see that next we have invoices. Let's take a look. And if I open up this invoice here, there's only one, we can see that, and again, just a note, it's Anita Bath on Bubble Street. I really wanted to make it kind of fun. Anyway, so what there was a garden design and installation. She made her first sale already, so that's exciting. So let's go ahead and put this in. Now, I'm just going to take a moment to mention when I use the word invoice and bill. Generally, an invoice is, for example, this is Sarah's invoice to Anita Bath, right? It is Anita's bill though. So the bill generally represents somebody's expense and the invoice generally represents somebody's revenue. So that's why we use how we generally use the term invoice and bill, but it's not like that's not a rule. It's just sort of generally how it goes. And another thing, they're kind of the same. So we just put a bill in, and in the middle of the bill, we could say this goes to cost of goods sold retail. You can't do that with an invoice, and for a very good reason. So in this middle section right here, we can't list, landscaping income in the product or service area because you don't want to have on your invoice, landscaping income to be the name of what we're selling the person. That's kind of tacky. And on the flip side, you don't want to have an income general ledger account for every single thing that you sell. Imagine like a hardware store, right? You're not going to have like a GL account for every single product that you have on a receipt. So that's why we need to create products and services that point to the GL account, the revenue GL account, every time that product is used. So you can imagine for a hardware store, for example, maybe they sold wood, I don't know, and you would have a product 2x4. And every time you use the product 2x4, the GL income account lumber revenue would increase. And then a 4x4 would also point to lumber revenue to increase. So every time you create a product or service, just be mindful of what income account you want that product or service to point to. So actually, let's go in order. This is Anita Bath, like this. We can just add her on the fly. And I'm not going to do her address. That was just for being funny as we put in our paperwork. And we'll come on over. And that was April 6th. Invoice 1001, so is the first one. And let's go ahead and what is this called? Garden design and installation. So let's go ahead. Only services is here. I'm going to add a new one. And we can add it here or in the products and services screen, but it looks exactly the same. And this is garden design and installation. And it is a service type. And this SKUing category is when you're organizing your products and services. And we're not going to do that today. And we sell it, and we could put in the description. We could put in the price. It's always going to be a different price. So I'm going to leave that blank. And I'm going to say, don't go to services, but go to landscaping income. That's where I can say every time this product is sold, increase this revenue account, and it's going to have HST on it. And I'm not going to say that we purchased this from a supplier. So we leave that alone, right? Don't use inventory in QuickBooks is kind of the general rule. So we're going to go save and close. And now it's added. So let's go ahead and put in how much she sold that for. $950 plus HST. And we can see it comes to $1,073.50. Excellent. And again, it doesn't say on here how it was paid. So what we're going to do is we're just going to go save and close and wait for the information on how it was paid. So that is important information that we do need to get from Sarah. Hopefully we will see it in next week's paperwork. So let's bring this file back over and let's come up to the main folder here, and we can see there are the bank feed downloads. And you can see that we have both the CSV files and the QBO files, and that is in the case of us experimenting and learning with other programs. I want to make sure I have the CSV download, but the QBO file download is perfect for us. We'll open that up. And this week we only have transactions on the Triangle M card. So there were no bank transactions this week, interestingly enough. So let's go ahead and add this to the QuickBooks file. Going to go to transactions and bank transactions. We can get to bank transactions by clicking here. This list is the same as this list. And we can't link to the M card account because M card doesn't exist. It's mock, it's a case study, but we can upload that QBO file. I'm just going to drag it over, continue. And then I'm just going to say this is the M card. Oh, what's it called here? Triangle MC. Sorry. Continue. And done. So now we can go over to the Triangle MasterCard tile. And we can see that this week, nothing weird has happened. You can see that all we need to do is go match, match, match. Now, this was a very simple week. That's why we can match, match, match. But it's important that you don't get click happy, right? A lot of times there's going to be very similar things that QuickBooks is going to get a bit confused. And we'll see that when we start working with the bank feed a bit more as the case study gets going. But especially with the credit card, that's less likely. But one thing that I can do is I can just look at the date here and the date there. And this says Gnome Hardware and that says Gnome Hardware. So this is from the bank, but this right here is from QuickBooks. And so if it's trying to match it to something that says Gnome Hardware on the same day for the same amount, then it is the same thing. So we can just hit match. And I would generally suggest doing them one at a time, but another option right now, we can see April 10th, April 10th, April 10th, April 10th. We know that they're all the same. You can select them and then just say accept. So you can see how using the bank feed can really help us with our bank reconciliations because we know the dates were all right. We know that the penny amounts was all right. We know that the payment method was all correct. And now we've marked them all as cleared so that when we go to do the credit card reconciliation, like it's practically done for us. So anyway, there we go. So that is Grand Gate Gardens, April 2025, week number 2. I hope you found this information helpful in the building, growth, and success of the business that you are working in and on. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness, and I'm at Nifty Gnome on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Newcastle, Ontario. Thanks so much for watching, and get out there and be that business that thrives.